Good morning, Jags. Fahad here. A little bit different format for this video this time. Just learning by trial and error, trying different things. I have several stocks to discuss this morning, and going to fly through a lot of these real quick, and we'll try to do similar kind of videos every morning right before market opens, just so that you have various stocks in front of you to take a look at, just to be prepared for the day, what's going through my mind, what's on my cheat sheet over here, things that should be on your radar as well. Brown Forman, BF.B. In some cases you have to type it in your platform BF/B. Either way, Brown Forman will be reporting earnings on Wednesday. I have to check. I think it could be either before markets open or after market close. Not exactly sure. We have to check on that. But it's reporting earnings on March 6th, on Wednesday. I think there's a good possibility over here the company is going to report a pretty good quarter based on these channel checks that are coming across. Now, National Alcohol Beverage Control Association, also short form known as NABCA. This is an organization that provides industry trends in control states. Now, the control states are basically about 14-15 states that in totality, they represent about 20 to 25% of total spirit volume of the industry. So we have pretty good size channel checks over here from this NABCA data. And take a look at this. These are a couple notes that come from Bank of America. In January, adjusted dollar sales grew 8% year over year, driven by volumes up 6% and the price over mix up 2%, and lapping a 4.4% rise a year ago. So going into January, the year-over-year comparisons were already tough, but this seems to be even better than that. 8% volume growth for the entire industry, or sales growth for the entire industry in the month of January is pretty darn good. On a reported basis, January dollars soared by 13.4% year over year. And this was the strongest growth that we have seen for the month of January for spirit sales since 1999. So almost 20 years history, basically 20-year history. This is the strongest report that we have seen, sales growth that we have seen for the month of January. Now, you guys know that Diageo also reported earnings. That's the symbol DEO. I think it was almost like a month ago. We own that stock, and that stock just blasted higher. And then after that, in Jaguar webinar, I also mentioned MGPI. MGP Ingredients is the name of the company, symbol MGPI, which makes the ingredients that it sells to other distilleries. And that stock reported earnings, and that stock basically ripped higher big time. So these channel checks, combined with what we have been seeing with other companies that have reported in this particular space, that continue to come out very, very strong. Just drilling deeper into this one, cocktails posted the fastest growth volume, reported volume gain year over year, up 22% year over year. Tequila was up 20% in January year over year, Irish whiskey up 18%, and vodka up 11%. Brown Forman alone, according to Nielsen checks as well as the NABCA checks, suggests that Brown Forman sales was about 6.2% year over year. So it is trailing a little bit behind the overall industry growth. Diageo was the best at 9.6% year over year growth for January. Nevertheless, when you have the entire industry doing quite well, I think it is a good chance that this could translate into good earnings from this company when it reports on Wednesday sometime on March 6th. Here's another two charts that I want to just quickly point out over here. On the left hand side, you will see that this is the underlying sales growth that we are seeing. And you will notice that for the quarter that will be reported, there is a jump sequentially from prior quarter to this quarter. This is the total 9-month trend for the fiscal year 2019 collectively. January picture of that was significantly better, but 9-month overall trend has actually improved sequentially. But the risk over here with Brown Forman is how tariffs which were put in place last year is continuing to weigh on margins. In fact, studies show that sequentially you're going to see about 320 basis points of margin deterioration when the company reports earnings, and the total R, you're going to see the operating income margin essentially trend down to 31.7%, which is what the second chart on the right hand side is showing. That is a little bit of a risk, but this risk has been playing out for nearly a year now. The question becomes, could you have a little bit deterioration in the operating margin, which is a pretty well understood story on the street, but is still able to basically overcome that weakness from incredibly strong volume growth according to these channel checks? I think they can. It's a little bit on the speculative side, but we'll see what the company reports. Also, if you look at the chart, this chart has been starting to respond to these channel checks pretty strongly. You can see the trend here. Even when the market started to recover in January, the stock was not responding. Notice on this particular chart. But when the channel checks finally started to come out late January as well as in early February, that's when you started to see the stock actually started to respond quite nicely. Pretty impressive candle on this stock today as well. It was up nicely when the market was getting beaten up. I think it has still more room to run. I think with good earnings, based on what we saw from other companies, that could still run. Next one, C Limited, symbol SE. Now, many of you are probably already positioned still, and if you're not, you were at least positioned going into earnings, because we presented a big bull case about Garena Free Fire game that was launched a couple weeks ago, and it has just taken the whole Asia by storm. The important thing that I want to point out in this note is that one day after the earnings report came out and the stock was up like 20-25% that particular day, the company opportunistically used that strength to did a large 50 million share offering. Now, this is a pretty significant dilution. It's about 13% dilution. And they came within a day or 2 days after reporting this fantastic quarter. But what caught my attention was that usually when you see a large dilution like this, when a secondary share offering is announced, you see the stock take a dive. Generally speaking, it comes in a little bit and basically, pulls back for a couple days, volume picks up a little bit and so on. Not in this particular case. This stock just continued to stay strong the whole time. There was a minor little bit with the overall market volatility, a little bit of a sell-off. Otherwise, it wasn't really giving up at all. That particular strong price action on a secondary announcement made me want to go back and take a look at it again, because naturally this shows that institutions continue to take significant amount of interest in stock. And I found a couple things that I want to point out that I think you're going to enjoy. The first one, the daily active users for the Garena Free Fire game basically increased to 40 million. These are daily active users. They increased to 40 million people at the end of the fourth quarter, a sequential increase from 27 million in the third quarter. The company now has a total of 350 million registered users globally for this game alone versus 200 million in the third quarter. So a huge sequential improvement. To put this in perspective, Fortnite, which was a pretty successful game launched last year, currently has about 200 million active users. This game, Garena Fire, has 350 million total globally registered users that are playing this game. Another point, not all of those 350 registered users are actually paying customers. You know that you can do all kinds of in-app purchases when you are playing this game on your phone or whatnot. About 5.5% of the total registered user base are buying things, through in-app purchases. But the important thing is that the in-app purchases, which the company calls pay ratio, increased sequentially by 35% from third quarter to fourth quarter. clearly this Garena fire game is on fire, and everybody is spending more money, and the registered user space is also increasing. But I think the most important part that I found very exciting about reading this earnings report was that the company did this entire thing. Remember, the revenues were $389 million in the fourth quarter versus a consensus estimate of $274 million, so a massive beat. But the company did achieved this entire growth with actually total amount of absolute dollars on the marketing spend going down sequentially. So basically the whole phenomena around this game taking off happened with practically no advertising at all. In fact, sequentially there was a 66% decline in the sales and marketing expenses as a percentage of revenues. A huge decline, 66% decline from third quarter to fourth quarter, which resulted in 900 basis points of margin improvement from the company. So that's really impressive in my view. The other business the company has is called Shopee. I think that's how you say it, Shopee, Shopee. The gross merchandise value of Shopee grew by 117% year over year, and sequentially it improved by 27% year over year, which was well above consensus view by about 25%. And most importantly, the take rate. This is the take rate the company charges from each transaction that happens on its platform. The take rate from the company was, a year ago, it was 0.59%. Then it increased to 2.14% estimate going into earnings, and then the company reported 2.59% actual. So a massive increase in gross merchandise value, or GMV, and on top of it, the take rate is also going higher. So a really impressive earnings report overall from both perspectives. If you look at this technically on this chart, yes, this was a massive breakout. The stock went from $17 to $23 per share, and then the company announced a large secondary offering of 50 million shares with a 13% dilution. But I still don't think it's done going up. With that kind of a growth rate, I think this was a breakout quarter that will probably find itself consolidating in a tight range, probably in the low 20s for a couple of weeks before we'll likely break out from here, and then we'll probably continue to go. Think of it this way: when the Fortnite came out, when a strong game comes out, usually you have it takes at least 2 to 3 quarters of the growth momentum stays with it, and then the year-over-year comparisons don't get tough until a whole year later. So this could be just another one of those runaway stories that will probably continue to play out to the upside for stock over the course of next 2 to 3 quarters, probably until the end of 2019. So I still don't think it's done going up, but I do expect the stock will probably consolidate short term over here in the low 20s before it breaks out over here again. The last thing I want to discuss, the fifth name, is Disney. There's a chart over here that I brought with me. If you look at it closely, this is actually a chart of April 115, 115 strike price, 115 call options, and overlaid on it is a blue line. That blue line is the actual open interest. Notice how the open interest was sort of basically steady for several months, but starting from the very moment when the company reported earnings around middle of January, that open interest has continued to build gradually, and now it's basically more than double, and now it's over 50,000 contracts sitting in April 115 call options. The reason why I wanted to bring it up is because I wanted to show in this next picture a particular snapshot that I presented in Jaguar first quarter outlook that all of you have. Take a look at what's going to happen on the studio side over the course of next couple of weeks on the right hand side of this chart. Captain Marvel is coming out on March 8th. This is the first major theatrical release by Disney that's going to be coming out this weekend. 2 weeks to 3 weeks after that, Dumbo will be coming out on March 29th. And then 2 weeks after that, Penguins is coming out on April 17th. So just before April expiration is here. Remember, these are April 115 call options where we have seen dramatic rise in the open interest. Well, just before April expiration is here, 3 major studio launches are coming from Disney, one after another, every 2 to 3 weeks apart. And I think these things are going to be blockbuster hits. And so this thing is going to move the needle. But it's not just going to end there, because you can see the whole calendar. There's Avengers, there's Aladdin, Toy Story 4, The Lion King, and then it just goes on. Frozen 2 is coming out. You better believe Frozen 2, when it comes out in November, that's going to be another massive blockbuster hit. And then lastly, Star Wars is coming out in December. I think this is going to keep the excitement alive for Disney all the year, the rest of 2019. Keep in mind also one thing, when it comes to the actual studio performance of Disney, the year-over-year comparisons for Disney are actually pretty easy. That the reason for that is that the 2018 wasn't such a great, remarkable year with lots of releases for Disney. There were Star Wars, there was a few others, but they weren't really big mega hits from Disney. So we're going to be looking at, in absolute terms, when you start comparing, when these numbers come out, you're going to be looking at actually pretty big numbers on a percentage basis for studios' overall performance. Disney's bull case doesn't just end over here, by the way. This is just a point I wanted to highlight because these are very short-term studio performances that are going to be coming out. But Disney's bull case in the long run also depends on Hulu, on ESPN Plus, on Disney Plus. Both of those were launched last year and they are growing subscribers base. And then the most importantly, the park performance. Keep in mind that the Star Wars will be opening in Orlando in the fall of this year. Sometime, I believe it's in August or September. So I think that's going to pack up the theme parks completely in Orlando as well. So those are separate bull cases. I just wanted to focus on the Disney's studio releases that are coming out that I think could trigger a technical breakout in stock. Talking about technicals, if you look at this is a long-term weekly scale that I brought with me. Now, I highlighted this congestion in this circle over here from September, October, November, and December period. This is heavy congestion right over here. The stock has been gradually climbing through walls of worries. If it can clear this 114 to 118, give or take a few cents, if it can clear this 114 to 118 congestion level on a weekly scale, as this chart shows, I think you have a case for Disney going all the way up to 125 to maybe even $130 per share, possibly by this summer. I hope to do this every single morning, so I hope I'll be back tomorrow mornings again with a few extra thoughts on various sectors and stocks again. Thank you very much. See you next time.